Welcome to another updated price analysis and price prediction by Zilliqa Zebra. Now, the recent bear run has disrupted the price gains for almost all cryptocurrency, and Zilliqa is not spared either. With this in mind, we have some updated price analysis using Macroaxis scoring framework. Continue watching to find out more. And as usual, if you find this video useful, don't forget to like and subscribe to Zilliqa Zebra for more useful news, updates, and guides on all things Zilliqa. The typical approach to any portfolio performance evaluation technique uses a basic comparison methodology to determine how a given portfolio has performed over time relative to an index, benchmark, or any other managed portfolios. So, the best portfolio is not always the portfolio with the highest return or the lowest risk. Macroaxis grades all portfolio originated in the wealth optimization platform using risk-adjusted return, which is adjusted not only for the effects of diversification, but also for the market risk that was diversified away. As an investor community grows, the calculation is adjusted based on the relative score to account for the individual time horizons, different tolerance risk, sector industry allocations, as well as the number of positions and types of financial instruments. Zilliqa is trading at 11 cents as of the 23rd of February 2021. This is a 21.43% decrease since the beginning of the trading day. Zilliqa at the current moment has a very small chance of experiencing financial distress in the next few years, and it has had a very solid performance in the past 30 days. The cryptocurrency ratings for Zilliqa are calculated daily based on Macroaxis scoring framework. The performance scores are derived for the period starting from the 25th of November 2020 and ending today, which is the 24th of February 2021. Zilliqa is abnormally risky given 3 months investment horizon. Zilliqa shows a Sharpe ratio of 0.26, which attests that digital coin has 0.26% of return per unit of risk over the last 3 months. The standpoint towards determining the volatility of the crypto is to use Zilliqa market data together with coin-specific technical indicators. By collecting and analyzing data for 21 different technical indicators, you can evaluate if expected returns of 2.79% are justified by taking the suggested risk. Using Zilliqa market risk adjustment performance of 1.76, downside deviation of 8.47, and mean deviation of 7.93 to evaluate coin-specific risks that cannot be diversified away. Zilliqa crypto coin volatility depicts how high the prices fluctuate around the mean or its average price. In other words, it's a statistical measure of the distribution of Zilliqa daily returns, and it is calculated using variance and standard deviation. We also use Zilliqa's beta, its sensitivity to the market, as well as its odds of financial distress to provide a more practical estimation of Zilliqa volatility. In terms of Zilliqa volatility analysis, the output start index for this execution was 0, with a total number of output elements of 61. Zilliqa average price is the average of the sum of open, high, low, and close daily prices of a bar. It can be used to smooth an indicator that normally takes just the closing price as input. Assuming the 30 days trading horizon, Zilliqa has a beta of -1.67. This usually means as returns on its benchmark rise, returns on holding Zilliqa are expected to decrease by similarly larger amounts. On the other hand, during market turmoils, Zilliqa is expected to outperform its benchmark. Beta and standard deviation are two commonly used measures to help you make the right decision. The company has an alpha of 3.1226, implying that it can generate 3.12% excess return over Dow after adjusting for the inherited market risk. Looking at Zilliqa's return volatility, volatility is a rate at which the price of Zilliqa or any other equity instrument increases or decreases for a given set of returns. It is measured by calculating the standard deviation of the annualized returns over a given period of time and shows the range to which the price of Zilliqa may increase or decrease. In other words, similar to Zilliqa's beta indicator, It measures the risk of Zilliqa and helps estimate the fluctuations that may happen in a short period of time. So, if prices of Zilliqa fluctuate rapidly in a short time span, it's termed to have high volatility, and if it swings slowly in a more extended period, it is understood to have a low volatility. Let's look at Zilliqa's return volatility. Based on a normal probability distribution, the odds of Zilliqa to stay above 10 cents in 30 days from now is about 14.83%. This Zilliqa probability density function shows the probability of Zilliqa crypto coin to fall within a particular range of price over 30 days. Hence, the probability of Zilliqa price to stay between 10 cents and its current price of 11 cents at the end of the 30-day period is about 6.09%. As a summary, the odds for Zilliqa to stay above 10 cents in 30 days is about 14.83%, and the target price in 30 days based on this return volatility index is about 10.45 cents. There are currently many different techniques concerning forecasting in the market as a whole, as well as predicting future values of individual securities such as Zilliqa. Regardless of the method or technology, however, to accurately forecast the stock market is more of a matter of luck rather than a particular technique. Nevertheless, trying to predict the stock market accurately is still an essential part of the overall investment decision process. Using different forecasting techniques and comparing the results might improve your chances of accuracy, even though unexpected events may often change the market sentiment and impact your forecasting results. Sophisticated investors who have witnessed many markets up and downs frequently view the market will even out over time. This tendency of Zilliqa's stock price to converge to average value over time is called mean reversion. However, historically, high market prices usually discourage investors that believe in mean reversion to invest, while low prices are viewed as an opportunity to buy. In this case, if you look at the hype prediction, as we can see from here, let me bring up my pointer. For the hype prediction, you realize that the range will give us an estimated value of about 9 cents, whereas the intrinsic valuation will give us about 8 cents, which both are actually lower than the current price. The 9 forecast gives us a value of 13 cents, while the Bollinger Band projection gives us a middle band of about 10 cents. So as a whole, it falls into the previous prediction of about 10.45 cents within the next 30 days. I hope that this price analysis video proves to be useful for you. All investments, including stocks, funds, ETF, or even cryptocurrencies, are speculative and involve substantial risk of loss. If you're looking for assistance on any topics related to Zilliqa, do feel free to drop me an email at zilliqazebra@gmail.com, and I will do my best to create a video around that topic. Bye for now.